Welcome, everybody. Today, you don't get Hurdy's deep voice, you get me, but welcome to the Mansfield Buzz.
Welcome to Mansfield Buzz with Jordan and Hurdy. Local business stories, let's dive in early. Jordan asks the questions, brings stories to light. Hurdy runs a tech, keeps production tight. Build trust in a town, discover and explore hidden gems and stores you never heard before. Community connection, that's what we're about. Tune in, join us, see what Mansfield's all about. Mansfield's all about.
I love the difference between me and Hurdy. He likes more of the rock music, and we have a rock intro, and I have a more laid back one. And
Nice.
You could just totally tell which one he likes and which one I like.
That was good. I liked it. I liked it. Who sings that?
AI. That's what sings that.
Okay.
Commission AI to make us our own song.
I love it.
Yeah. Suno, by the way, for those watching, it's a phenomenal AI tool. You can give it your own lyrics, your music style, and it does a phenomenal job. It's $10 a month, and then you have unlimited music. I mean, it's credit based, so I guess eventually you do run out of credits, but I haven't, and it's just incredible for branding.
Yeah, that's cool.
Yeah, you got to try it. Go to ChatGPT and ask ChatGPT to make you your own theme song, and then take it over to Suno, and then just give it your lyrics, and then just give it your favorite music style, and then it'll just create your own theme song, and you're good to go.
Dang, I'm gonna try that. That is cool. I'm gonna try that.
Oh, totally worth it. So I guess Hurdy usually has a lot of really good stats in here that I don't have. So I'll just go through the ones that I do have. Welcome to the Mansfield Buzz. I am your host, Jordan Huff. Hurdy is not here today. He's taking care of his mom, as he should. So we're giving him the day off. And then Matt and I are here going to hold the fort down. But if you're watching this, go on over to YouTube at Mansfield TX Buzz and give us a like and subscribe. That will help the show. I'll get the word out, and you can keep helping spread the word of the Mansfield business, Mansfield and surrounding, because we're all pretty cool, if I say so myself.
Yes, we are.
If you want to come on the show, hit Hurdy up at hurdy@hurdyberg.com. And just tell him Jordan's amazing. I want to be in this show so he can ask me questions. Yes, please do. He'll love that. So we are live every Thursday at 2 on YouTube at Mansfield Buzz, and we're also live on Facebook. The archive is on YouTube because, Facebook deletes your videos after a month, so they just do that now. But without further ado, I want to get into this interview because, Matt, I've known you for forever in business world. I cannot believe you haven't been on the show yet. This is so exciting.
Yeah, it's been a long time coming. Thank you for having me.
I'm so excited, dude. You're finally here.
Yes,
so we're going to start with icebreakers. But before we do that, we have a little section called Quick Rewind. We just highlight previous guests. And this time around, we have some little funny clips from one of our previous guests and mutual friend, Doug from Play Park MTX. So we'll knock that out of the way, and then we'll hop in.
Quick rewind, keep it tight. Highlights, prime to ignite. Catch the vibe, feel the rush. Previously on the Mansfield Buzz.
Are you still waiting for that ball to hit me? I'm waiting for you to lock in your membership pricing for the next 3 years on Black Friday. Are you still waiting?
And knows Doug wants to be able to throw that ball at him.
Oh my God. It was so satisfying. The best part is it took several takes.
Yeah. Oh, that's fantastic.
Because he kept flinching. He kept flinching. It was coming. He's just like, just like, no, you can't flinch.
Super flinching.
We have to do it again. It's like, oh.
I love that. That was a great video, though. That was fantastic.
Thank you. It was way more fun to shoot it. I'll promise you that.
I believe you. If you need someone else to do it next time, I volunteer for free. I'll throw the ball at them as many times as you need.
I'll take you up on it. I think we found our format is just things that hit Doug in the face.
Yes. But the play park is amazing. My 4-year-old loves it there. Practically lives there. Always asking to go. So if you haven't taken your kid there, definitely do.
Yeah, definitely. Yeah, take Joe, and my son's 8. That's a 4-year difference. And he loves it as well. And both our kiddos have played together in there plenty of times, and they just both love it.
Yes, they have. It's a great place.
But we are now going to go into Matt Smith.
Woo.
And we're going to go into, let's, speaking of 4-year-olds, let's go back into your youth. Let's go from the beginning.
Okay.
So I want people that don't know, other aspects about you. And we're joking before the show that people tend to think that you were in the military or played football because you're both really muscular and have a shaved head. And that obviously means you either played football, you were in the military.
Yeah, I get that a lot.
Yeah, and there's a deeper story to this because apparently you used to be scrawny.
I used to be skinnier, less muscle mass, is I like to call it scrawny, is a little hurtful, but yeah, I had a much different body. I was a swimmer actually, so I grew up swimming and burned a ton of calories every day and couldn't gain weight to save my life. So yeah, I used to be scrawny.
Scrawny. That's crazy, dude. So, and it's really funny. I remember they did a study with Michael Phelps because his diet is ridiculous. He eats I think 8,000 calories a day. And scientists were, scientists do this. They were trying to figure out the whole calories in, calorie out. It didn't make sense. How is he burning this many calories? Even with all the exercise he's doing, it does not add up to this. And they could not figure it out for the life of them, how he was burning that amount of calories until they factor in the temperature of the water. Because the pool is usually 86 or 82 degrees.
Yeah, it's probably closer to 82.
So it's an 82-degree pool. We, normal humans sit around 98 degrees. So it's colder than your actual body weight. So you are literally burning calories by being in the water just to keep your body temperature.
Yeah.
And when you add to that, it actually adds up to a huge caloric deficit.
Yeah, it was, swimming competitively, you burned a lot of calories and you were in the water 6 days a week, 2 hours plus. It was a lot. And I don't miss it. I'll be honest with you.
Yeah. Yeah. It's hard work. I've never actually, I don't know how to swim for exercise, doing the whole, going up and down the lane. I never learned how to do that. I used to be a lifeguard, so I do know how to swim, but for me, it's I know how to go under. I could lift something really heavy out of the bottom. I can hold my breath for 2 minutes, but I can't that back and forth. I never did figure out the few times that I've tried it. You get winded so fast.
Oh, yeah. Yeah, when I do something, every now and again, it is embarrassing the level of endurance I have compared to what I used to have. It's a big fall from grace.
Yeah. Well, but then also, you weigh a lot more than you. Speaking about you used to be skinny, you weigh a lot more.
Yeah.
And muscle weighs more than fat too. So, the amount of mass they need to move back and forth now is nowhere compared to what you used to.
True. But it is good exercise, and I probably should get back into it. But just because you should do something doesn't mean you do it. But eventually, I'll probably get back in there.
Yeah, you should. You should give a lesson. You should take our networking group into how to swim for exercise.
Yeah, I was a lifeguard, all through high school and college, and I used to do private lessons. So yeah, I can definitely, I can teach you, man. I can get you there.
I'll take you up on it. Yeah, that'd be cool to actually be able to use the lane pools.
Yeah, I got you.
Nice, cool. We'll make content out of it.
Yes, sir.
Well, that is crazy. Oh yeah, but I wanted to touch a little bit on this. So earlier in the show, before we started the show, you did say that you started lifting regularly in 2009.
Yeah.
That's awesome.
Yeah, so it turns out I had this habit of eating a lot from swimming, right? I'm just always eat. And then when I stopped in college and I started drinking at 21, because you're not supposed to drink before 21. So when I turned 21, alcohol was introduced, and my body changed, and I had to do something about that. So yeah, I got into the gym 2009, got a little, I've been consistent since 2009. Nothing crazy, not trying to be bodybuilder, but just trying to be healthy. And consistency is the key. I'm not there for 2-3 hours at a time. I'll do a quick 30-45 minute workout and call it a day. So yeah.
That's cool. And it shows, is that consistency, because you don't look like somebody that's just recently put on a lot of muscle, you look like somebody who's just been muscular and fit your entire life, which I think is why many people think you were either football or military, because you look like you've been in great shape for a long time.
I appreciate that.
Well, it shows dedication, Lifting's
Yeah,
hard. It literally is hard.
it
It
is. And
hurts.
that's why they call it working out because it's work. But when you do something long enough and you get enough joy out of it, it's not really work anymore. People talk about that with jobs, right? But it's just a part of my life. Like I get up and I go to the gym. It's just what I do. I don't have to think about it. I don't have to force myself. If I don't go for a couple of days in a row, I don't feel as good. And I guess it's a minor addiction of the happy endorphins that you get when you work out. And yeah, it's just part of who I am. It's not a chore, thankfully.
Yeah. Yeah. And it's that's a great actually a great segue, because it is enjoying those like daily habits, daily things that you really start to get to. And I think because I've I've known you for a little while now, and I've just sort of watched your evolution of your business as you've kind of like honed down where you're heading to. And I feel like now you're getting to the point where you're getting now, like, you're enjoying the repetitions.
Yeah. Yeah, absolutely. When I first got into it, I kind of wanted to be everything to everyone.
Yeah.
And I realized that when you try to do that, you end up being kind of no one to everyone.
Yes.
And it took me a while, and I got some really good advice from Sam Maddox. And if you haven't had him on, you should have him on. He's awesome. But he told me, he's like, hey man, like find your niche and really hone in on that, and everything else will come with it. And so I looked into what our company is the strongest at and what was around me in Texas, which is veterans. There's so many veterans in Texas, and I think we have, if not the strongest, one of the strongest loan products out there to help people that need the help the most. And when I finally realized that and really put all my efforts into helping those people, it's been huge for me and my business, and obviously the people that I help, because a lot of them get turned down and never thought that they could buy a home. And so that moment of them realizing that this home is theirs, and it's the best. It's the absolute best.
Yeah, that's awesome. So, man, for the people that don't know you or know what you do, because a lot of people watch this on the once it's up on not the cloud, on YouTube, they might
Yeah.
not know you. Could you tell them what you do?
Yeah. So I'm Matt Smith. I'm a loan officer with Mortgage Solutions Financial, loan officer specializing in VA loans. We do all types of loans. We're strongest in government, so VA, FHA, USDA. We can do obviously the conventional. We do the non-QM, bank statement loans, P&L loans, land loans. But specifically, I market myself and really try to do the most work with veterans. Because we are one of the few lenders that I know of that do not require the down payment. The minimum credit score. A lot of lenders require a 620 or a 580 in order to qualify for a VA loan. The VA guideline actually says no minimum credit score. And so we actually underwrite to that. So if someone has a 400 credit score, they do not get disqualified simply on what their credit score is. We look at their whole
Hang on. Let me stop you there and ask you, because that's insane. So you don't have a minimum requirement, like as a veteran for a VA loan, like there is no minimum credit score.
No minimum credit score. So even if they have no credit, we can work with them, because the guideline says they do not require that.
That
So
is
anytime a veteran is told, hey, you need this, you have to have a 620. That's not the VA guideline. That's that lender's rule. So they put their own overlays, own requirements on top of the guideline, and that's what they're told. So if anyone believes that they can't qualify, that's with that lender, not all lenders.
That's interesting. So the lender can put their own requirement, which I'm assuming they are allowed to put their own requirements in order to vet who they're lending to, but is not.
Absolutely.
But that's not the law. So if you're being told that, hey, you must have this in order, but like what they're not telling you is you must have this score in order to business with us.
Right.
Wow. Okay. That's huge.
Yes. And that's my biggest thing, getting out there and educating people and say, hey, just because you've been told no by tons of other lenders, Mortgage Solutions is different.
Yeah. That's crazy. That's cool. Okay. Now I see why you enjoy your everyday. That's, I'm getting a little bit more light on
Yes.
that. So let's take it back to, let's take a step back. Because I mean, I'm pretty well versed in real estate, and obviously you are. So I'm trying to look at it from a lens of somebody that doesn't understand, is maybe just first going into this, or maybe never gone through the home buying process. There is where we're talking about the VA loan is something that is offered for veterans, but there is different kinds of loans, right? We hear about conventional, we hear about an FHA, there's a VA.
Mhm.
Could you tell me a little bit about them and what makes VA different?
So with conventional, it's a little bit harder to qualify. Just the guidelines for conventional, a little bit harder. You have to have better credit. Usually, you're going to want to have more down, and then you're also going to have the mortgage insurance that goes with it if you don't put down the 20%. FHA, that is for people that don't have that. They don't have to have perfect credit. They don't have to have the full 20% to go down, but they're also going to have the mortgage insurance. If you have a 580 credit score and above, you can put down 3.5%. If you have 579 down to 500, you're going to be required to put down that 10%. So VA, again, no minimum credit score. There's no down payment. So that's great right there. And then there's no mortgage insurance. And one thing that's really cool, and I'll probably talk about this a little later, but VA is the only loan product where if you get seller concessions for closing costs and you have anything extra, instead of it going back to the seller, it can be used to pay down debt.
Oh, cool.
Yeah. So I've actually had clients, again, everyone's scenario is different depending on what their closing costs are and what the seller offers. But I've had seller or buyers literally get paid practically to buy a home because they had no money down. They got all their closing costs paid for. They got their earnest money back, and they got debt paid down at the end at closing. So they got paid to buy a house.
That's awesome. That is cool. And so I'm trying to think. Well, my question was going to be which one's better, but I think you already answered that. But just to really, really fine tune it there.
Yeah.
Really straight up like veterans, no money down.
So it's no down payment. There are costs associated with the loan, right? There's the fees, the title, and all that. There's the escrow account that you have to prepay, so your taxes and insurance. Mm-hmm. But again, that all can be covered with seller's credits.
Okay, and that is typically they talk about like it's a seller's market or it's a buyer's market,
right?
And when it's a buyer's, well, yeah, actually, you're the expert. You tell me.
Yeah. So I mean, it when they talk about seller and buyer market, it's for the amount of time that it's on, that houses are on market. So if you're putting a house on the market and it's selling tomorrow, that's a seller's market because you have a bunch of people bidding for your house. You're able to take the highest bid. You can pick and choose what you want to do. You don't have to give any concessions. You can say, hey, I'm not doing any repairs. You're going to take this house as is because I got 20 other people that are willing to have put in an offer. That's a seller's market. Buyer's market, sellers are going to have to negotiate a little bit more. There's not as many buyers. Their house is sitting on the market for 60, 90, 120 days. And, they're going to have to negotiate a little bit. They're going to have to do those repairs that the buyer wants. They're going to have to, they don't have to, but, if you only get one offer on your home and they say, hey, I need help with closing, and you really need to sell your home, you're going to give them those concessions. And so right now is a buyer's market in terms of, sellers are willing to negotiate. They're willing to have that discussion and say, all right, you need help with closing. All right, here you go. With a VA, you can have up to 4% of seller concessions. And so, that can cover, either a majority or all of your seller concessions. And if you get more than 4%, pay down debt.
Wow, that's really cool.
But it's not zero down. It's down payment is zero. There's still going to be fees associated with the loan.
Yeah, because you got to pay for the origination loan. Like basically, you're paying money to get the like to make this loan happen. That's
Correct.
how that's how the loan people make money.
Yeah.
And then there's all the other things that you have to put in. But as far as like with an FHA, I think FHA is what, like 3%. It's pretty
Three and a
low.
half if you have 580 and above.
Mhm.
10% if it's 579 down to 500.
Okay. So there is a credit limit, and you have to put a little bit of down. And well, I mean, especially with how much, I mean, 3.5 doesn't sound a lot, but with how much houses cost now, that can be quite a bit.
Exactly. Yeah.
Okay. And then
Right.
conventional is typically what, like 20%?
Everyone thinks 20%, but you can put less. You're just going to have the mortgage insurance that you're going to have to pay if you put down less than 20%.
Okay. Wow. Okay. That's should have joined the military.
They have an amazing program, and especially right now, any veteran that wants to buy a home needs to seriously take a look at it, because as soon as rates go down and everyone is, bidding, there's a bidding war on a home that you love, the chances of you getting it go down, and the chances of you getting help with closing costs go down. You can always refinance once rates drop when you're already in the home. But if you're waiting, those prices of the homes are only going to go up. So you're going to be paying more for the same home that you could have got right now.
Yeah. So right now it's a really good opportunity because there's, because houses are sitting in the market for a little bit.
Yeah.
Yeah. And okay, that helps me clarify it. I was thinking back in around the pandemic was when people were like overbidding on the houses by like cash offers 10-20% above the comps. And it's like,
yeah,
that was
today is actually 10 years since I closed on my home here. And it was the same thing. Houses were staying on the market for a couple of days. And if you didn't put $5,000-$10,000 over asking, you weren't even going to get looked at.
Yeah. It's a bizarre time. It's like probably one of the more like exaggerated or exacerbated pricing discrepancies going on. But now it's almost a complete flip side. So if you have a access to a VA loan, then this is when you can help them walk out getting paid to buy a house.
Potentially, don't want to make any guarantees. Potentially, there's opportunity.
Hey, if you could just get into a house and not have to put that much down, like that's just still incredible.
It's incredible.
Yeah, it's not something, and house is an appreciating asset, so it's not a bad financial investment.
Exactly.
When you consider everything else, like like a car, the moment you drive it out the lot is worth less.
Yes. Yeah. Exactly.
So I have another question here that it touches up on that too, but you've helped veterans with credit scores in the 400s buy homes.
Yeah.
How?
So it depends on them being able to reestablish positive history, right? A lot of times, when you're in the military or what, life happens, whether it's medical, loss of family member, whatever it is. Life happens, and you just, you got behind on some things or whatever. But if you are able to show that you've reestablished positive history, we're able to work with you. Again, your credit score alone is not going to disqualify you. So as long as you can reestablish positive history, you're paying your bills on time, we can work with you. We're going to have to get letters of explanation saying, hey, what led to this derogatory account? What led to that? What led to this? And 9 times out of 10, they have reasons. It's not just like, oh, I just didn't feel like paying. Like there's things that happened that led them to that circumstance. And all we need is a letter of explanation, send it to the underwriter, and we move on.
Wow. And so so you said establishing positive history?
Yeah.
Okay. And so what does that entail? Is just like showing that you're paying your bills and like you're doing
when we pull your credit report, we can see every late that you've had. So if you haven't had a late in 6+ months, that's establishing positive history.
Okay. Wow, that's really cool. That's again, should have joined the military.
It's I keep saying it's an amazing product.
This podcast brought to you by the U.S. Armed Forces.
Right. And listeners going to be up.
Right? Like, man, next up, you're going to be a recruiter.
Right. Yeah.
So, digging deeper into this, like, what's one of the biggest myths about the VA loans that you wish veterans understood?
Well, obviously the minimum credit score,
Mhm,
that's not real. And then that VA loans are harder to do.
mhm.
They're not. They're just like every other loan product. We usually ask for 30 days to close. The fastest I've closed the VA loan is 17 days, and
Oh, wow.
so that it's not harder to do. It's not doesn't take longer. It's not worse for the buyer or for the seller or the agent. It's just just like every other loan program. We can get it done, and we usually ask for 30 days.
That is awesome. And, I don't know if I heard it or like I can see that perception. Like it's harder, or it's more complicated, it's more
Yeah.
technical, or certain.
So yeah, so like the appraisal is a little bit different. There has to be a VA appraisal, and we have to make sure that the home is sanitary and safe for the veteran. And some people that want to sell their home in bad condition, that want them to take it as is, then yeah, I would say a VA is probably not going to approve your home. But if you
Mm,
just if you have pride in your home and you're selling it because you want to upgrade or downsize or whatever it might be, and you have a good house, the appraisal is going to come back fine. Like
okay. So the VA loan actually does take some active steps on ensuring that the property being bought is in good condition and something that is worth the buyer's investment.
absolutely, yeah. They got to make sure the roof is good, and if there's holes in the roof, the VA is not going to allow it. If there's mold, um, if something's not accessible, they're going to make you fix it. But like I had one where it was something simple as the hinges on the door to the garage, it didn't automatically shut, so they made them change the hinges, stuff
Yeah.
like that.
Mhm.
Where it's not like they're making you remodel your house, but it has to meet a standard.
Yeah. Yeah. And, especially when it's what do we call it? A seller's market, right? When they're just going off like, in days, then, sellers can be like, yeah, half of this house is in ruins, but whatever. Like they're going like hotcakes. So just buy it.
Right. And it's like I know my house isn't perfect, so I'd rather take another loan or another offer than the VA because I don't want to have to do any extra work. I can see that, coming into play. But right now, they're going to take whatever offer they can get because they're just not getting bombarded like they were in the past. So again, a great time for people to get in because your house is going to get fixed. You have a better chance of having your offer accepted. It's the time. The time is now.
Wow. And so is this something that the VA veterans can use more than once, or say like you get a one-time coupon,
No,
you flip it and you're done?
yeah, no, absolutely not. You can definitely use your VA loan more than once. So there's a couple more different scenarios. You can either, if you have a home already with the VA loan, you can either sell that and you get your entitlement back. But you could also use what's called bonus entitlement, and it'll allow you to buy an additional home as long as it's over $144,000 and it's under the county loan limit. You can get a second home. That the new home that you're buying has to be your new primary, and then that the home you just left is now a rental property. But yeah, you can absolutely have two VA loans at one time.
Oh
As
my
long as
god.
if you have like an $800,000 home, you're
Uh,
probably not going to have enough entitlement left, so you're going to have to bring some money to closing. But let's say you have a $200,000-$300,000 home, and you want to get another 3 to 4, maybe. Good chance you're going to have entitlement left, and we'll be able to calculate that for you and get you that second home,
that's really
which
cool.
again has to be your primary.
Wow. So they're really it really is making it easy for you to like really use this as an investment tool and then even move
Absolutely.
on to a bigger, nicer house, presumably, and then you retain the one you have in order to turn it into an additional source of income.
Generational wealth. That's how you start.
Wow. That's really, dude, I don't think a lot of people know that.
I gotta talk about it more then.
Yeah, that's phenomenal. I don't like I wasn't sure if you could use it more than once. I kind of assume you could, but it's, you sell a house, you buy another one. I had no idea you could actually like kind of like divide and conquer all at the same time.
Yeah.
Wow. See, that to me is a no-brainer.
I'm telling you, man, it's a special time to be a veteran or active duty member to buy a home, man. Like it's a special time right now for them.
Yeah, that is really cool. That's really, really cool. I had no idea. And so, and you said there is an entitlement cap.
Yes, the county limit, like Tarrant County, I believe, is like 806,500. So again,
Mhm.
you can get a very nice house for 806,500 out here. So yeah,
Okay. And that's Tarrant County. Do you know Dallas County?
for the most part, it's around the same in most of Texas. I don't know if it's any different, but I would have to look.
Yeah, but it's they all hover around the same.
Yeah.
And do you know how often that gets readdressed? Because the one thing I did think about is like, man, like 5 years ago, that was a 800, like that was a much bigger house than it is
Yeah.
now.
I believe they do that yearly. I believe they update it yearly.
Oh, wow. Okay.
Yeah. Because again, like California, like it's going to be a little higher in the expensive parts of California. You know what I mean?
Yeah.
Like $800,000 home can get you a little shack in California,
Yeah.
unfortunately.
Yeah.
And so yeah, it varies.
Okay. That's cool. I didn't know that. Well, man, like there's all sorts of goodies here. And I'm excited. Let's keep on digging in here. So, can you use a VA loan to buy a duplex, triplex, or fourplex?
Yes, you can, as
This is the
long
whole like
as
house hacking thing, right? Like you're
house
you're like
hacking.
live
And
in one
again,
and rent the others.
I wish I would have known about this before I bought this house because I definitely would have done that. But yeah, you absolutely can buy duplex, triplex, fourplex with a VA loan as long as you're living in one of the spaces.
Okay.
Yeah. And then again, bonus entitlement, go buy another one. All of a sudden you have, 8 doors. As long as you're living in one of them, you now have, it's, and then again, you can always refinance out of the VA loan, right? And then now you're restoring your entire entitlement because you no longer have a VA loan. You still have the property and you can keep on moving. So it's, yeah, you absolutely can.
That brings a good question that I didn't ask you when we're kind of defining the different ones. When it comes to interest rates, do the VA loans tend to be higher, lower, or they're pretty equal?
VA tends to be lower. Yeah, VA and FHA tend to be lower.
It's getting absurd.
Yeah. Well, one thing what's great again, when you have lower credit, right, you're going to have a higher interest rate, which is our the interest rate for our portfolio loan I think is very reasonable. But the great thing about VA loan is it's called an interest rate reduction loan, and so there's no documentation, there's no credit pull. It's just after 6 on-time payments in 210 days from the first payment, you can get this interest rate reduction, which all it is it reduces your interest rate, and all of a sudden you have a new loan, but you have a new interest rate, and your payments went down without having to re-qualify for a new loan, which most other loans you have to re-qualify and make sure that you still can make these payments. But this is just all it is reducing your interest rate.
Yeah, normally you have to requalify. You have like another credit pull, or sometimes you have to buy the rate down.
Yeah.
And this is just a good faith, like, hey, discount.
So there is again cost to the refinance, and so as long as the recoupment of the cost of the refinance can be recouped within 36 months, the VA will allow that. So again, there's times where you can save someone hundreds of dollars, and yeah, maybe their loan it gets extended for a year, but they're recouping that money, within 36 months. It's absolutely worth it for them. Especially, if you have a 400 credit score and now you started off in the 7s and now you're in the 5s. Again, I'm not giving out what it would be, but just as an example, that's huge, right?
Yeah.
So that's again why the VA is fantastic. The interest rate reduction loan is fantastic.
That's it's a great tool. And going back to our original question, buying a duplex, triplex, fourplex, the fourplex is the cap, right? Like you can't buy anything more than 4 doors.
Yes, correct.
Okay. And that is similar to how the FHA works. Like it's still considered falls under the, I think they call it single family.
Yeah. Well, no, not single family. That's it'd be multi, but it's residential.
Residential, yes.
After that, it goes into commercial.
Yes. Once again, you're the expert. That is really cool. That I'm still mind blown. This makes a lot of sense. Now let's talk about a little bit of the flip side of things. What have you had like bankruptcy or foreclosure, short sales, or things like that? Can you still qualify for a VA loan, or is this something you can lose?
So normally they want a 2-year period um, from the discharge date of your bankruptcy. There are circumstances where it can be a year. I actually worked with a veteran that had a bankruptcy, and we had to be able to prove that it was a extenuating circumstance.
Mhm.
And in this case, it was medical. It was a medical issue that led to the bankruptcy, and so we were able to close 1 year and a day to the discharge date. He was able to close on his home.
Wow.
So instead of waiting the 2 years, it was the 1 year and a day.
That's wow. That's also unusually short, right? Because I thought like bankruptcies are supposed to like really like mess up your credit for what, like 7 years?
It does, but yeah, no, 2 years is usually, and even with FHA, it's 2 years usually to have to wait before you can be eligible.
Okay.
Again, you have to reestablish positive history. So there's a lot of things that have to go into, showing that you are now, someone that is, good with the money and not, gonna fall into potential bad habits and continue to not pay.
Yeah. All right. Well, even that turned out to be better than I thought. Okay, so then now to help out our fellow real estate agents, what should they know about VA loans? And especially like it could help them serve better their VA veteran clients.
Yeah, a lot of it I would say is understanding the debt to income ratio. Again, it's going to be different for all lenders, but for us, we can go up to 65% debt to income ratio, which is extremely high. Which again, I don't want to put someone in a position where they can't pay. But let's say that the veteran has they're self-employed and have a W-2 job, right? But they just started self-employment. They can't qualify with that income, but they have the money, right? And so based on their W-2 job, their debt to income ratio is higher. And with FHA and conventional, usually it's going to cap out at 50, maybe 56 with FHA with wow, I've lost the word for it, but yeah. Anyway, sorry. With the VA, we can go up to 65, and so it gives them more ability to purchase and more buying power. Also, if they're receiving VA benefits, we can gross that income up because it's not taxable. So we can gross that up 25%. So that also increases their buying power and helps with their DTI.
Okay.
Which is debt to income ratio, DTI.
Yes. Okay. That's and Sin, you mentioned it can go up to 65. That is 65%
Back
debt
in,
to the 100% of your income.
yeah.
Wow.
Yeah. Which again, if you're overextending yourself, that's never a good thing. But if you're stretched on paper, just based on qualifying income, and let's say you have a spouse for whatever reason isn't on the loan, and you have other types of income that we can't use to qualify.
Yeah.
You're stretched on paper, but not in reality.
Yeah. And, I know a lot of veterans. I mean, you and I both actually know a lot of veterans that have their benefits. They get some sort of supplemental pay, and they have also their own businesses.
Right.
And I can imagine a lot of those, especially your self-employment income it's difficult for a bank to take it seriously.
Well, yeah, I mean, if a lot of business owners run into the issue of the reason why not the reason, but a benefit of having your own business is you have all these write-offs and you're not paying Uncle Sam all this money, and so you show like, hey, I made very little money last year, which is great when it's time to pay taxes, but when it's time to qualify for a mortgage, I'm going to look at it and say, hey, man, unfortunately, you made $300 last year. Like, obviously, we know you made more than $300, but this paper says, your tax return says $300 for the whole year. Like, you don't qualify for anything. But if you also have the VA benefit, paying you, then I've qualified several veterans on just their VA benefit, and no issue.
Yeah. Yeah, that's a really good point, because a lot of business owners will get into that issue, and you don't really think about it. Yeah, you're saving
Yeah.
tax money, but it makes you very unloanable.
Yes, which sucks because I mean the system isn't really set up for homeowners for business owners, unfortunately.
Yeah, I mean that's something that I struggle myself too. Just because you can pay yourself like owner draws, you can write all the stuff out beforehand. So yeah, you can minimize your taxable income, but then your loanability suffers.
On paper, you are broke,
Yes.
but
Yeah.
that's why we have programs like bank statement loans, P&L loans. But again, obviously, those don't have the same benefits as the VA loan.
Yes. Should have joined the military. uh, so if a actually I have this other question, but before I ask you, because it's kind of like just to help them navigate through it, but myself, I'd like to understand, like you're obviously know the how to navigate the VA loan space very well. And I've had actually a few conversations with veterans that people that I know that have access to this kind of benefits, and they're like, oh yeah, like my real estate agent put me in touch with somebody and they know how to do it. And then I hear like little bits of information where I'm like, I don't think you're being advised by somebody that understands the ins and outs
Yeah.
of this. What are some things that you would encourage either like veterans or people that know veterans to help them know like who really understands the space to the best of your advantage and who is just vaguely familiar?
Well, I think a lot of lenders like us offer a variety of programs, right? And everyone has their niche, right? Some people are luxury, like I do. I don't want a loan unless it's $1 million plus, right? There's the hard money lenders. There's people that do the wow, I lost the word again, man. Commercial. They do commercial lending.
Yeah.
And so you want to get with a company that does a lot of VA loans. Like I can say, oh, we offer this, but I don't do a lot of it.
Mhm.
I'm probably not going to be able to give you the ins and outs of everything if I offer it every once in a while. I can do it. If I'm doing majority of my loans, which I am VA, I can tell you what I've seen. I can go. I know what a manual underwrite looks like. And what the hoops that we have to go through with the manual underwrite, with the letters of explanation and stuff like that, because the underwriter is going to require a little bit more information. Just like, hey, got to make sure that you're good. And what I tell people is, when we ask you all these questions, it's not so we can find out how to say no. It's so we can find out how to say yes. And so I urge people not to get discouraged when you're getting questioned on your past when it comes to getting a loan, because we're trying to get the whole story. Because if you just say you come to me, Jordan, and say, hey, I want a VA loan, and you say, hey, I have a 400 credit score, majority of lenders are going to say, well, I can't help you. But with us, we say, okay, why? What led you there? Oh, I had I got my leg amputated and I wasn't able to work for a year, and then my wife got diagnosed with blah blah blah, and you know what I mean. And so all of a sudden, it's no longer you're not a bad person to lend to. It's you had an extenuating circumstance that led you to this. You're now past that, and you're actually a perfect person to purchase a home. And all I had to do was go dig a little bit deeper past the number to figure out what happened.
Yeah.
And so that's what I would say. If someone doesn't sit down with you and actually get to know you and what led to where you might be, if it's poor credit, you might not be talking to someone that does a lot of VA loans.
Yeah. Yeah, that makes a lot of sense. Because you have access to you have complete sight into the whole process.
Yeah.
And which story triggers will be like, oh well, here's obviously one thing that we can address. Like as you mentioned earlier, right, establishing I forget what you call that, like good history.
Yeah, positive payment history.
Yes.
And like the bankruptcy, right? Like if he would have said, hey, I just had a bankruptcy, because I spoke with this person in December of last year. He said, I had a bankruptcy, it discharged in July. And I could have just been like, well, can't help you. Talk to you in a year and a half. Instead, I was like, all right, well, talk to me. What led you to that? And then we got into the story, and all of a sudden it was like, you can buy in 6 months. Like, we can't do it right now, but in 6 months, you can be in a home. And yeah, all it was asking the follow-up question to, what a lot of people would just see as a red flag and say, I'm not going to talk to you anymore.
Yeah. That's awesome. That's awesome. That's a good answer. That's a great lens, actually, because it's easy to see, right? It's like, all right, so are you taking a vested interest in me? Are you like getting deeper in the story, or are you giving up right away?
Right. Yep.
I also have a really good question from Susan. She asked, what about in the context of a divorce? I'm assuming it's with your VA loan.
Mm-hmm.
If the house and mortgage are both in both names, but one has to buy the other out and to refinance the mortgage, what options are available?
One has to buy the other out. So I did go through divorce lending, and I haven't done it in about 6 months. I know that to qualify for the next home, there has to be a history of payments for, I believe, 6 months. So if there is going to be a divorce or there's alimony, I know that those payments have to there has to be a history of it already happening, or that it's going to continue to happen. But as far as the divorce, I guess what put the question back up again?
Yes.
The house and mortgage are in both names, but one has to buy the other out. So I guess the question is for the veteran. Is she asking if the veteran's going to keep it, or what? I guess what's the.
So I think if I'm understanding this, is when there's a divorce and the mortgage is in both their names, but it's a VA loan.
Yeah.
And one has to buy the other one out and then refinance the mortgage. What options are there? I'm assuming if the veteran has to buy her out and and then they need to pick up another home, or
The wife has to pick up another home, or the veteran has to pick up another home?
well, I mean, the wife, I'm assuming, could do it, whatever. But the veteran is like, you are kind of limited in the number of loans that you have. So if you need to like pull out of this one, buy them out, and then assumably you want to get another house, like, how does your distribution of the entitlement and the number of loans you have, like, how does that get affected?
Yeah, so we would. I mean, it really depends, because if the veteran is staying in the home, then obviously he's not going to buy another home, and she would have to, she wouldn't be eligible for a VA loan because they're no longer married. But if she's keeping the house and he's leaving, then I believe it would look at bonus entitlement.
Okay.
That would be his new primary.
Okay. And then if you needed to buy, yeah, and so if we could keep like kind of just unwinding this one, if the veteran moving out, she's staying in the house, he's moving out, and then he needs to buy her out from the house.
Mm-hmm.
How does the veteran do that?
It's a great question, and I have no experience with it, so I have to find out.
Yeah, well, we'll post it on the show notes.
Yeah.
We'll put it in the comments.
Good job.
That is tricky, right? Like, because then you have the VA loan stuck in there, but then you have to buy her out. Like, would an entitlement allow you to like get that initial out?
Is the buyout just the equity that she's getting paid?
I would assume so.
Equity.
I would assume so. Well, you can't have a VA loan if you're not a veteran, right? So if you're getting divorced and you suddenly lose your veteran status, then you cannot keep that.
She cannot. Yeah, she cannot use a VA loan, right?
Yeah.
But you also, in Texas, and it's the only state, you can't do a cash out refinance with a VA loan. So he would either have to refinance into another loan or sell the home.
Ah, okay. Yeah.
Yeah, because you can't do a cash out refinance with a VA loan.
Okay. So okay. No, that's probably the answer.
Only in Texas.
Yeah, only in Texas. Okay.
Yeah.
So you would have to either sell it or refinance into another product, which frees the benefits, and then that allows for that equity to go out and buy somebody out.
Yeah.
Okay.
And maybe that's what she was asking.
Yeah, that makes sense, actually, because that sounds strategic. So I think it's what needs to happen. Okay, that's good. I'm glad that was a tough question. Thank you, Susan. That
Yeah.
was
She said she was going to give me a tough one, so she nailed it. Well, way to go.
yeah, that's nice. Check out her podcast. She
Yeah.
dropped some good knowledge there for those of you watching. Okay, so then another question for you. If we have veterans listening today, and if not in the future when they're listening to the recording, if they're wondering where to start, what are the first steps to take? What do you advise them?
So I would advise to reach out to either myself, someone that's knowledgeable in VA loans, and have that initial discussion. Let them know where you're at so they know how to best help. If you like, hey, I need to only pay $1,000 a month, might be a little difficult. But you're like, hey, I have some money or I have no money, so I'm gonna need help with other credits. This is my credit, and kind of just understand what the veteran's goal is with homeownership.
Mhm.
Then we can go to the application, and so we can get a view of their credit profile and see what they get pre-approved for. So it's really that initial conversation. Do the application, let them run your credit so they know exactly where you stand, what you qualify for, get that pre-approval, and then you go shopping. So it all starts with a conversation and reaching out to someone that is going to take the time to listen to you and get to know you and know how to best help you.
Okay. And a little bit of follow up on that, because we talked about something that I definitely do think it needs to be underscored is sometimes we're in the point where like we don't know if can we even afford a house?
Right.
And this is really helpful for that. Now we can also be a little further down the road, and we're at a point where like we got the house, we're paying for it, like we're almost past that point, and we don't think about it anymore.
Mm-hmm.
But these products, especially with the, I believe you call it additional entitlement or
Bonus entitlement.
bonus entitlement. It's something that I don't think it's talked about a lot, but you might be at a point where like it might be wise, especially because it's a buyer's market right now, to look at another residence, turn your current one into rental income, and upgrade a house, upgrade your life, and get some income in the process.
Yeah.
For that person, like where should they start? How they start thinking about that? Because they might not even know they can do this.
Right. Again, it's having the conversation. Hey, this is what I want to do. Is this even possible? And again, it's running the credit, seeing what your liabilities are, seeing what your income is, and saying, hey, we get your certificate of eligibility. It shows you what your entitlement is. We're able to calculate what your bonus entitlement is based on where you want to buy. And we can say, yep, you can definitely buy that. You qualify, or you can qualify, but it needs to be at this range. We can tell you exactly what it is. But if you're just like, hey, what's my rate going to be on this? It's like it's impossible for us to tell you that, because we don't have your credit profile. We don't know anything about you. So anything I tell you will just be made up, and it does no one any good.
Yeah, just like, and especially in that context, it's more of a business decision, and all business decisions need some numbers attached to them.
Yeah, and a lot of people, they're a little skittish when it comes to getting their credit run, because like, hey, I don't want my credit to go down. Your credit will take, again, it's a hard inquiry, but it's not going to take a hit where it's all of a sudden you're no longer eligible to buy a home. Right? It'll drop you a couple points. You continue to make your payments the way you always have been. It'll go right back to where it was. So I don't want people to think that they have a 700 credit, they get their credit checked, and all of a sudden they're down at 500. Like,
Yeah,
that's not going to happen, especially since it's for a mortgage. It doesn't hit like other credit checks.
yeah. And also, I believe you can have 2 credit checks in your report without any repercussions. So if you haven't like gotten a credit card or bought a car, then you should have some wiggle room.
Right. And then when the people that are a little hesitant to have their credit run, I'm like, well, are you looking to buy anything? And they're like, no. I was like, well, if your credit takes a small dip, it's not going to, you're not trying to buy anything. You're not trying to qualify for anything besides this home. And we're not going to run your credit and say, hey, because we ran your credit, you no longer qualify with us. Like it's just not going to happen.
Yeah, especially because you guys, the VA doesn't have a minimum credit score. So like, yeah,
Right.
no, it's not going to go that much. And you have a good point. Like, heart checks don't affect it nearly as much as other ones like going to collections, being late on payments, maxing out
Right.
a credit card. Like those things are what really, really impact your score.
Yeah.
Man, it's a bit of a masterclass. I'll be honest, I'm a little jealous that these are awesome
So am I.
benefits.
So am I. And like I get so excited when someone's gonna use their VA benefit because it's like, this is, you have such an opportunity that you earned. You know what I mean? Like it wasn't just handed out. Like they absolutely earned it. And it sucks when you earn something and someone says, "Hey, sorry, I know you earned it, but we're not going to allow it."
Yeah.
I'm grateful that Mortgage Solutions says, if the VA guideline says this, we're going to honor that and let you use the benefit the way it was designed. And so, yeah, I absolutely love VA loans, and I love what they allow veterans to do with homeownership.
That's really cool. Well, if you're watching and you want to buy a house and you have access to a VA loan, like you'd be crazy not to talk to Matt.
Yeah, it's worth a conversation.
I got your email down here and your website. So matt.smith@mortgagesolutions.net. And also check him out at mortgagesolutions.net/Matt Smith. And I should also point out that Matt's been crushing it on social. He's actually getting in front of the camera and talking to it.
I'm trying.
I like your AI stuff. It's funny. Like particularly one of you getting punched in the face was really funny.
That was by far my favorite one. The caption was "getting denied for a VA loan because your credit is by getting punched in the face."
Yes,
like,
very, very much in the nose, if pun intended. But I'll tell you, my favorite one out of the stuff you put is the one where you were just in your car telling about the people you've been able to help.
Yeah. I mean, it's the best. Helping people that have a ton of money and have great credit, like it's cool and all, but like the people that are like, "Hey, I never thought this was going to happen. Like this changed my family's life." It's so much more rewarding. And I'm grateful that I'm with this company and this is what we focus on because it's so much more rewarding to help the people that need it the most.
Yeah, I can resonate with that like wholeheartedly. I mean, I come from working with Fortune 500 companies and working for the Nikes and the Old Navies that have all the money in the world to do whatever they want. Like, yeah, it's fun, but you didn't help anybody. You don't make a difference out of anybody's anything. Like, I don't know, if anything, I made some C-suites, like, I don't know, few $100,000 bonuses that for them is
bonus,
and instead of working with small businesses, which is akin to like working with individuals that didn't think this was possible, and it's like, no, like, we can bring this to you, and the reward, that feeling, you actually made a difference.
Yeah, it's the best. Nothing better.
I agree. That's so cool, man. I'm so glad that you decided to focus on this path. I think it's going to be I think you're going to make a difference in a lot of people's lives. And I think they'll be lucky and fortunate when they come across to you to do that happen, to make that happen.
I sure hope so.
Well, I think this is a nice ending. Anything you'd like to tell our audience before we sign off?
Nothing I haven't already said. Obviously, veterans, active duty members, thank you for your service. Thank you for what you do for us. And it's just the least I can do is help you, become a homeowner and meet that goal and that dream of yours, because you've earned it, you deserve it. And I'd be honored to help you through that journey.
Excellent. Well, this is the show. We're live every Thursday at 2. And I believe tomorrow we're going to have our Halloween special. So we'll have people coming in dressed up. You have to be in costume. And we'll just tell scary stories. So tune in tomorrow for Halloween special. And then we'll see you next Thursday.
Awesome. Thank you, Jordan.
Thank you, Matt. This was awesome.
Yes, sir.
Worth the wait.
Yes, it was. Thank you.
Bye, y'all.
Take care.